Hey guys, and welcome to the Working Money Channel. So we got another drop for Bitcoin overnight. Bitcoin right now trading at $42,300 per coin. And as you guys can see here, we are getting below this wick that, that initial drop there before the retrace. A lot of people were getting scared about that. We have gone now below that. So Bitcoin did now wick down in and around here, around $41,000. The thing we have to pay attention to, one of the things, is that this level of support still has not been broken. So that would be below $39,000. Basically, if Bitcoin breaks 40,000, we are certainly going to be in new territory. By and large, though, Bitcoin is indeed holding this level of support, so it would have to break below 39,500, give or take. But it's still holding. It is rebounding back up. The one thing I wanted to mention is that, take a look at that, market cap now below $2 trillion. So just broke below 1.998. But look at Bitcoin dominance, guys, 40%. So we haven't seen altcoins taking off yet. This is why I still think there is hope for Bitcoin, right? One of the theories, if we are to presume that Bitcoin is going to make lower lows and that we are now in a bear market for Bitcoin, is that we have to see that retracement up to the 0.702. Okay, that would mark the beginning of alt season. Until we saw Bitcoin retrace, alts would pump, Bitcoin dominance would go down in and around this area, altcoins would pump, of course, and then boom. That would be the end of the market, and we have not seen that yet. So what are we seeing, guys? Crypto market, if you look down here, everything has been down over the last 7 days. Bitcoin down almost 12%. Ethereum has taken a beating as well, 14.46. Binance coin down 13.2. Notice some of the top coins are down some of the most. You got XRP down 10. But even on the daily, look, XRP is up 1.19%, along with HEX up 3.29 and ADA up 2.21. But most altcoins, guys, you can see, have been taking a beating. This is no way alt season. Of course, there are going to be some anomalies. One of the anomalies here, noted by XRP Crypto Wolf. Anyone else noticing that BTR has been pumping while the rest of the market is bleeding? Now, BTR is the BITRUE coin. And if I just go back here and pop it in up here, BTR, click on that, you guys can see it is up 31.22%, trading at about 35 cents as of the time of this recording. This is the one-day chart. You guys can see how much BTR has rallied. There are some reasons behind this. Of course, BITRUE's yield farming hub is coming. Where can you find new and convenient ways to farm coins at up to 150% APY using BTR? So I have a BITRUE account, guys. I do have an affiliate link in the description if you guys are interested in opening one up. You can use my affiliate, don't have to use it. I have it there for ease of use in case you guys are interested in this kind of thing. Which coins do you want to farm when it launches on January 10th? Shout out the replies. So this was just tweeted out by BITRUE official. Shout out the replies at the project's Twitter account. So there is Solana, Cardano, XFIN, some possibilities there. So BITRUE coin, of course, it's similar to Binance coin in a lot of ways. Every so often in my Binance account or in my BITRUE account, I see some of those coins pop up. So, just back to the market here. Of course, all coins are going to go at their own pace, but by no means are we seeing a full-fledged bear market as of yet. Bringing up XRP here right now, XRP trading at 76 cents, so not too much movement for XRP actually. Has not even gone down below this wick here that we saw on December 4th, down to 65 cents. So XRP still holding support as well. And even just bringing Bitcoin up here on the weekly, you guys can see it is forming what is looking like a head and shoulders pattern. Let's see if it goes back up and if it can crack that neck. If it doesn't, if it does come back down, this is the end, guys. This is true bearish territory. Okay, if it does break down below here, definitely 100% confirmed, at least in my mind, that this is a bear market. That is kind of like the last call. I get it, people right now, very, very anxious, especially if you're still holding Bitcoin. But really, just looking even just at this structure here, if we were to assume this is the top, we're trading again on low volume. And, there are a lot of reasons for this. Of course, the Fed's recent remarks. Also, this was just out from a few days ago. The Kazakh government resigns and shuts down internet amid protests, causing Bitcoin network hash rate to tumble 13.4%. So If you did not realize, Kazakhstan is actually one of those countries that mines a lot of Bitcoin. This also certainly had an effect on Bitcoin price. So on Wednesday, Kazakhstan, the second largest country in the world when it comes to Bitcoin mining hash rate, second largest, guys, experienced unprecedented political unrest due to a sharp rise in fuel prices. And as a result, the country's presiding cabinet resigned, but not before the state-owned Kazakh Telecom shut down the nation's internet, causing network activity to plunge 2% of daily heights. So this definitely has had an effect on Bitcoin mining, considering they are, what did they say, the second largest country in the world when it comes to Bitcoin mining. The move dealt a severe blow to Bitcoin mining activity in the country, as per compiled by ycharts.com. The Bitcoin's network overall hash rate declined by 13.4%. And guys, the country accounts for 18% of the Bitcoin network's hash activity. So almost 20%, almost 1/5 of all Bitcoin hash activity. So something else that we should be paying attention to with regards to the current downturn. Okay, if there are no miners, we are definitely going to see this, especially if it was a sharp decline based on an anomaly like the Kazakh government deciding to turn off the internet. Also wanted to just bring this up, guys, from Crypto Caesar here. Another argument for a prolonged bull run, the Bitcoin cycles, the trend-based Fibonacci extension, the Fibonacci extension 1.618, the logarithmic regression band, and the 200-week SMA. In my opinion, we see a top in 4 to 6 months maximum and a bottom in about 12 months, give or take a month or so. This is what fits. So again, just looking at previous cycles, I always love looking at previous cycles, previous halvings for Bitcoin, where we were then and where we are now. Bringing up the same kind of patterns as TechDev was in previous videos that I've done. So we are now retracing to the 1.618. We still have to make our way up here to the 0.786, at least on his chart here. That's what it's looking like. So former tops, right? In 2013, we did finally see that last move up. In 2017, we saw that last move up to the 0.786. Here we are just retracing, and it looks as though there is a final move up in 4 to 6 months as per this timeline cycle. And guys, remember in yesterday's video, if you guys did not catch that, it might be a good video if you're concerned about the market. I'll link it up here in the top right-hand corner. The fact of the matter remains, we have seen Bitcoin cycles in the past gradually get longer and longer. And in that video, I just demonstrated that we are kind of at the exact same period as we were at the height of the last cycle. I believe it was about 1,065 days or so. And so we have not actually gone further like we saw in 2013 to 2017. We had actually taken a longer time to get to the top of the market. So we're just kind of at that same amount of time as we saw back in 2017, early 2018. And, that also just does kind of push this idea that there is more bull run to go. Anyway, gonna keep moving, guys, with SBI Ripple Partner News. This coming from Crypto Eddie here on Twitter. Largest outside Ripple shareholder and XRP ODL user. Completed recruitment of venture capital fund SBI 4+5 fund with more than 40 banks participating in the upper side of 100 billion yen. So here's the article here in Japanese. Let me just translate that to English. Completion of recruitment of Japan's largest venture capital fund, SBI 4+5 fund, with a total of 100 billion yen. So let me just go down here. We are pleased to inform you that the fund has received investment from more than 200 investors, and the total investment commitment amount has reached 1 billion yen, and the solicitation has been completed. Since its establishment in April 2020, the fund has been established by institutional investors such as Sumitomo Mitsui Bank Corporation and Daiichi Life Insurance Company, Murata Susakusho Company Limited, Letterpress Printing Co., and General Security Company, with investment from new regional financial institutions such as major operating companies in the industry. And then it gives some more company names. The fund has already contributed to the realization of Society 5.0 for SDGs such as fintech, AI, blockchain, the Internet of Things, big data, robotics, healthcare, Medicare, nursing care, infrastructure, transportation, and energy. Wow, this sounds like a WEF agenda, etc. We have been investing in promising startup companies in various fields, but in the future, we will focus on impact investment related to green innovation and ESG, as well as areas that match the trends of time, such as the metaverse and Web 3.0. So that is where the money is going. Of course, it does make sense that a company like SBI that is very, very connected to Ripple and the XRP token would be part of this investment into the metaverse, for example, AI, blockchain, fintech, Web 3.0, all those things, right, in the future where we know, DLT technology and the XRPL will be front and center. So another Ripple investor, SBI Holdings, also investing in the infrastructure now that we're seeing along with more than 400 banks and I believe they said 200 participants, putting up 100 billion yen. And so what does that work out to be? Yen to USD, 100 billion, 100, 1, 2, 3, 1, 2, 3, 1, 2, 3. So that is roughly $863 million US. Big numbers here. Wanted to thank Crypto Eddie for pointing that out. We've also got this, guys, from the XRP Crypto Wolf. The SEC filed a letter of supplemental authority in support of its motion to strike Ripple's fair notice defense. And so we've got the letter here. Dear Judge Torres, the plaintiff, the SEC, respectfully submits this notice of supplemental authority in further support of the SEC's pending motion to strike defendant Ripple Labs' fourth affirmative defense, in which Ripple asserts that Ripple did not have and plaintiff failed to provide fair notice that its conduct was in violation of law in contravention of Ripple's due process rights. And here, down here, they want to bring in the Fife argument. Fife rejected at the pleading stage the same fair notice argument Ripple asserts in this case, and that the SEC has moved to strike. Fife involves a broad statutory term dealer, like Ripple's arguments here regarding a different and similarly flexible statutory term investment contract. So, this is sounding very legal and very cumbersome, maybe a little confusing for some people. Let me just bring this up because Martin Valk here also just brought up an article, the AMB Crypto article, talking about this, and it kind of spells it out in clearer terms, I think. XRP lawsuit, SEC filings gives a new reason to strike Ripple's fair notice defense. So essentially, we need the fair notice defense to go through. This is kind of the crux of Ripple's argument. And if the judge acknowledges it, basically the SEC's goose is cooked. So they're trying to find ways to kind of, thwart this, to kind of not allow the fair notice defense to go through. As the SEC versus Ripple lawsuit enters 2022, many in the XRP community expected that the next court date would come around January 19th. However, crypto watchers were here for a surprise after reading the SEC's latest filing, which strikes at one of the founding pillars of Ripple's case. What the Fife is going on here? I like that title. In a copy of the filing, the SEC used a court denial from this particular case to further support its own pending motion to strike Ripple's fair notice defense, and it is called Fife. The reason it is called Fife is because it is another case and they want to use that precedent to fight against Ripple. The Fife case was between the SEC and the defendant John Fife and his 5 entities. In its filing, the SEC noted Fife case rejected at the pleading stage the same fair notice argument Ripple asserts in this case, and that the SEC has moved to strike. The filing went on to add, indeed, Fife rejected the defendant's fair notice defense at the motion to dismiss stage despite acknowledging the lack of binding authority construing the term dealer. In essence, what the SEC reportedly hopes to do is to apply this outcome to Ripple's use of the term investment contract. So because Fife rejected it, the SEC feels that they can also reject it. They want to reject the term investment contract. By showing that the phrase has been bound by legal parameters since 1946. In the SEC's view, this would strengthen its motion to strike Ripple's defense. Previously, the San Francisco-based blockchain company has claimed that the SEC did not give it fair notice about the sales of XRP violating the law. The SEC's own filing stated, in Ripple's case, binding authority construing the term investment contract has existed since 1946, and then it gives the case law there. Thus, Fife provides additional authority for striking Ripple's 4th affirmative defense. So this is what the SEC is now trying to pull out of their sleeve. Will it work? Very, very good question. Well, we've got to go to the legal experts, right? It sounds as though Jeremy Hogan does not think it is going to work. A case came out last month that marginally helps the SEC's position in its motion to strike Ripple's fair notice defense, so the SEC filed it with the court. It was in a very different stage of litigation, and the standard is completely different than the SEC versus Ripple case. And then he's just retweeting out James K. Filan's tweet here with regards to that statement. We had not heard a lot from James K. Filan. A lot was very quiet over the Christmas break, especially, but even just over the last month or so. Not too much in the Ripple case. Here's what Jeremy Hogan goes on to say. In the Fife case, the defendant tried to argue fair notice in order to dismiss the lawsuit entirely and failed because the burden is very high on a party moving to strike a pleading. So he's saying it failed for the SEC at that time. Fife can still raise it as an affirmative defense later, and I expect they will. In the Ripple case, however, it's the SEC that is trying to strike the affirmative defense of fair notice, and it has a high burden to meet. So he's saying, in this case, the SEC has to do it, but, they have a tall hill to climb with this. The general idea in modern courts is that the decision should be made after looking at the evidence, unless there's no plausible way of winning. So a simpler explanation, the SEC's new case is also discussing whether a guy should date a girl. Here's just kind of an analogy here. But the new case involves a 25-year-old guy, and the Ripple case involves a 50-year-old guy. The girl hasn't changed, but the criteria the guy will use to make the decision are completely different. So that's an interesting analogy. XRP Crypto Wolf bringing this up. The SEC doesn't die easily, just like the little cockroaches they are. Some people still confused about this. Jeremy Hogan goes on to explain the SEC's new case is also discussing whether a guy should date a girl, but the new case involves it. Okay, so this is the same explanation basically. And so, some people want another explanation. Jeremy Hogan goes back on the record saying the SEC just poured orange juice on your hands and told you it handed you an orange. Basically kind of manipulating the facts here and trying to give you what their interpretation of something should be. However, what Jeremy Hogan's pointing out here is that it probably will not fly with the judge. So this is all very positive, guys. Free American Spirit also kind of summing it up to, this is like when a man interprets the Bible from their own limited point of view and create a religion that really does not line up with God's word. So that's just kind of another analogy here. Sherry V just chiming in down here saying, I would be very disappointed if the ruling in Fife case did help the SEC. As you said, the litigation is different. The selling of penny stocks in the US works very different than what Ripple has done to conduct business. So a lot of moving parts in this particular court case. However, coming from a legal expert, Jeremy Hogan, one of the best in the XRP community. I mean, we've got so many great lawyers here helping us out to understand how this is all going to come to pass. We've got the internet sleuths as well, right? Uncovering corruption in the SEC. So that's kind of one facet of this. Then there's the actual lawsuit. I'm sure over there at Ripple headquarters, they're all just kind of sitting back and chuckling. Because, I mean, this is kind of free legal work for them, isn't it? Doesn't sound like the SEC has a leg to stand on, and I've been saying that for months now. Jeremy Hogan doesn't think that Fife will stand a chance. Meanwhile, we're seeing the crypto market correcting, guys. But let's not forget, low volume still has not broken critical support, at least if we're looking at Bitcoin. The XRP price just going along with the rest of the market at this point. I know, we still got to be patient. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.